every inflation indicator that is market-based, whether it's inflation break-evens, whether it's the price of lumber, copper, oil, industrial metals, iron ore in China. All of these prices have either gone into effectively a bear market or completely collapsed. And so what we're seeing here is a real rollover in future inflation pressures, which would imply that it is indeed transitory. And on top of that, because of the emergence of the Delta variant, we're seeing the economy slow down with credit card purchases being down, movie attendance going back, and the willingness of people to attend theaters, according to a latest survey, has dropped rather considerably as well. So when you put all this together, it seems that all the taper talk you're getting from everyone but Jay Powell is potentially premature. Not that I'm in favor of doing this forever, but we're also still waiting on more fiscal stimulus. But it doesn't look like the economy is really in a position at the moment to say that, all objectives have been achieved.
Yeah, I think it's interesting. We certainly have had a lot of taper talk from Fed governors and the like. I'm not sure we haven't had any from Jay Powell. I just know it's been very quiet if it's there. Let's talk about some of those industrial commodities. I take your point, but when you look at some of the agricultural commodities and the rising costs of food at the grocery store, that is there, and that seems to be a little more persistent. Number two, there is also wage inflation. We're going to talk about a survey later where people are leaving jobs or looking for jobs in search of higher pay. And typically when you get higher pay, those wage increases, which are one of the prime drivers of inflation, are sticky.
Yeah, and I tend to worry less about wage inflation than, a more persistent type of not necessarily commodity-based inflation. And even some of those agriculturals that you mentioned are also starting to fall. Like, the pig herds in China have gone up considerably from last year's culling because of illness. And so we're starting to see a lot of reversals in all these different areas. So, you put higher wages against what might be a stop or a halt in increasing prices, and you really just give employees more buying power, given what's happening in the labor market. So I'm not sure that becomes a spiral, and I'm not sure that's the way. I don't think we can think of it necessarily in a 1970s style fashion, which had a wide varieties, of other factors that contributed to that problem back then.
Ron, I know we usually talk pretty top level. I don't know how tactical you want to get here, but just to point out, the markets are held up right now by healthcare and utilities. Yeah. Technology hasn't done that great. Basically, growth isn't working that great. Value's not working that great. Rates are down instead of up on the taper. You look at what's happened this summer. Financials are sort of flat. Energy's down considerably. Yeah. I mean, where should people go? I guess if you're sitting in a broad index, it's one thing. You could kind of hope that there's not a bigger reaction to the taper. But if you were betting on the kind of value reopening plays, that narrative is not playing out right now.
Right. And in fact, everything's almost evened out. I mean, value's underperforming a little bit, small's underperforming a little bit. International, particularly emerging markets, including China, are underperforming a little bit. The U.S. markets, broadly speaking, when it comes to equities and sovereign debt, have become the safe haven trade. And you see that in the value of the dollar going up as well, which in and of itself is also slightly disinflationary. Hard to talk about that in this environment, but the dollar's up almost 4% year to date. So I think the U.S. is looking very good right now. And again, what you mentioned, Kelly, it's not just utilities and other defensive names, but those big cap stay-at-home technology stocks are driving the averages higher. So yeah, I think right now you want just market exposure, but you also have to be extremely selective if you are doing individual stock picking. And again, you lean as something we've talked about for a couple of years now. Fortress balance sheets, good debt coverage, very strong brands, large market shares. Those are the companies that you generally want to gravitate towards.
Yeah, and Pepsi and Costco at record highs. As you're speaking, we're showing that there, kind of illustrates these very dynamics we're talking about. Ron, thanks. Appreciate it, sir.